Hey everyone, welcome back to Buck Breakdown. Today we're talking about something that affects over 67 million Americans, the Social Security Cost of Living Adjustment for 2025. The numbers are officially in, and if you're collecting Social Security, your monthly payment is about to change. But here's the thing. While the headlines will tell you retirees are getting a raise, the reality is a lot more complicated than that. So let's break down exactly what this adjustment means, who it helps, who it doesn't help enough, and most importantly, what you can actually do with the information. Because understanding the system is the first step to making it work better for you. All right, let's start with the actual number. The Social Security Administration has announced a 2.5% cost of living adjustment for 2025. That becomes effective with January 2026 payments. Yes, I know the naming is confusing, but we'll get to timing in a minute. So what does 2.5% actually mean in real dollars? If you're receiving the average retirement benefit, which right now sits at about $1,927 per month, you're looking at an additional $48 per month. That works out to about $576 over the course of a year. For someone getting the maximum benefit, which is around $4,873 monthly if you worked at maximum taxable earnings throughout your career, the increase is approximately $122 per month. And if your benefit is on the lower end, say around $1,200 monthly, you're looking at an extra $30 per month. Now, I can already hear some of you saying, that's it? $30 or $50 bucks? And I get it. When you're watching grocery prices climb week after week, when your utility bills keep hitting new highs, when your prescription copays seem to increase every year, a 2.5% bump doesn't feel like much. But here's the context that matters. This adjustment is based on a very specific formula, and understanding that formula helps you see why the number is what it is and why it might not feel adequate. Every year, the Social Security Administration calculates the COLA using something called the Consumer Price Index for urban wage earners and clerical workers. Yes, that's a mouthful. It's abbreviated as CPIW. Here's how it works. They look at a basket of common goods and services, food, housing, transportation, medical care, apparel, and track how prices change from July through September compared to the same 3-month period the previous year. If prices went up, your Social Security goes up by that percentage. If prices somehow went down, your benefit stays the same. There's a protection that prevents benefits from decreasing. This year, inflation cooled compared to recent years, which is why the 2.5% is lower than what we've seen. In 2023, the COLA was 8.7%, the largest increase in 4 decades. In 2024, it dropped to 3.2%. Now it's 2.5% for 2025. That sounds like good news on the inflation front, right? Inflation is slowing down, economy is stabilizing, but here's the frustrating reality that every retiree knows. Just because inflation slows doesn't mean prices go back down. That gallon of milk that doubled in price, it stays doubled. The rent that jumped 20%, it doesn't drop back. The prescription that went from $15 to $40, yeah, it's staying at $40. So when people talk about your raise, what they really mean is that your purchasing power is being adjusted to try to keep pace with higher prices. It's not extra money, it's playing catch up. Now here's where things get really frustrating, and this is something not enough people talk about. The CPIW measures inflation for urban wage earners and clerical workers, not retirees, not seniors, workers. Why does that matter? Because workers and retirees spend money very differently. Working age people spend more on things like commuting, work clothes, and childcare. Retirees spend significantly more on healthcare, housing, and utilities, and those costs have been rising much faster than the general inflation rate. There's actually an alternative index called the CPIE, Consumer Price Index for the Elderly, that tracks spending patterns specific to seniors. Studies show that the CPIE typically shows inflation running about 0.2 to 0.3 percentage points higher than the CPIW. That might not sound like much, but compound that over 10, 15, 20 years of retirement, and you're talking about thousands of dollars in lost purchasing power. There have been proposals in Congress for years to switch to the CPIE for calculating Social Security COLAS. It would result in slightly higher adjustments that better reflect what retirees actually experience. But so far, it's still just proposals. The law still mandates using the CPIW. So every year, your adjustment is based on a formula that systematically underestimates how much your actual costs are rising. That's not a conspiracy. It's just a flaw in how the system was designed. Okay, now let's talk about something that eats into your COLA before you even see it. Medicare Part B premiums. Most Social Security recipients have their Medicare Part B premium automatically deducted from their Social Security check, and those premiums typically increase every year. The standard Medicare Part B premium for 2024 is $174.70 per month. The 2025 premium hasn't been officially announced yet as of this recording, but historically it tends to increase by anywhere from $5 to $15 or more each year. Let's say the premium goes up by $10 in 2025. If your COLA increase is $48 per month, that premium increase just ate 20% of your raise right off the top. And it gets worse for higher income beneficiaries. If you earn over $103,000 as an individual or $206,000 as a couple, you pay what's called an IRMAA surcharge, income-related monthly adjustment amount, that can add anywhere from $70 to over $400 to your monthly premium, depending on your income level. There is one protection called the hold harmless provision. This prevents your net Social Security benefit from decreasing when Medicare premiums rise. So if the premium increase would wipe out your entire COLA and then some, the hold harmless rule caps how much they can deduct. But, and this is important, not everyone is protected by this rule. If you're new to Medicare, if you're paying an IRMAA surcharge, or if you don't have your premium deducted from Social Security, the hold harmless provision doesn't apply to you. The bottom line is this. When you see that 2.5% COLA announcement, remember that for many people, the actual increase they'll see in their bank account will be smaller after Medicare premiums are deducted. So when does this new amount actually hit your account? The 2025 COLA takes effect with benefits payable in January 2026. Yes, the naming is confusing. The 2025 adjustment shows up in 2026 payments. That's just how Social Security labels things. When you receive your January payment depends on your birthday. If you were born between the 1st and 10th of any month, your payment comes on the second Wednesday of each month. Born between the 11th and 20th, third Wednesday. Born between the 21st and 31st, fourth Wednesday. So for January 2026, you're looking at January 14th, 21st, or 28th, depending on your birthday. There's one exception. If you started receiving benefits before May 1997, or if you receive both Social Security and SSI, you get paid on the 3rd of each month instead of following the birthday schedule. SSI recipients, those receiving Supplemental Security Income, get paid on the 1st of each month or the last business day of the previous month if the first falls on a weekend or holiday. You should receive a notice in the mail in December showing your new benefit amount. Don't throw that away. Actually read it. Check that the math makes sense. Verify your gross benefit, your deductions, and your net amount. If something looks wrong, contact the Social Security Administration right away. All right, so you're getting this increase, maybe $30, maybe $50, maybe $100, depending on your benefit amount. It's not life-changing money, but it's not nothing either. So how do you make it count? First, adjust your budget. If your monthly expenses have crept up over the past year, this increase gives you a chance to rebalance. Don't just let the extra money disappear into general spending. Be intentional about it. Consider the thirds approach. Divide your increase 3 ways. 1/3 toward immediate needs that have been squeezed, groceries, utilities, gas. 1/3 toward building a small emergency buffer. Even $15 or $20 a month adds up. And 1/3 toward something that improves your quality of life, whether that's a hobby, gifts for family, or just a little more breathing room. Second, review your Medicare coverage during the open enrollment period, which runs from October 15th through December 7th. Sometimes switching Medicare Advantage plans or Medigap policies can save you money that might offset or exceed your COLA increase. Third, check whether you qualify for any assistance programs you're not currently using. Many states offer property tax relief for seniors, utility assistance programs, prescription drug assistance, and food programs. The National Council on Aging has a benefits checkup tool at benefitscheckup.org that can help you find programs in your area. Fourth, if you haven't already, set up your online My Social Security account at ssa.gov. It lets you verify your payment information, check your earnings history, and get important notices electronically instead of waiting for mail. And finally, and I can't stress this enough, watch out for scams. Anytime there's news about Social Security increases, scammers come out in force. The Social Security Administration will never call, email, or text you asking for personal information or payment to process your COLA. If someone contacts you claiming to be from SSA and asking for information or money, it's a scam. Hang up, delete, report. Let's zoom out for a minute and look at what this means in a broader economic context. The 2.5% COLA represents about $72 billion in additional annual payments flowing into the economy. That money goes toward rent, groceries, medical care, home maintenance, and local businesses. It's not just about individual beneficiaries. It's a significant economic impact that ripples through communities, especially in areas with large senior populations. But it also highlights the ongoing challenge of retirement security in America. Social Security was designed to be one leg of a three-legged stool, along with pensions and personal savings. But traditional pensions have largely disappeared, and many Americans don't have adequate savings. For millions of seniors, Social Security isn't supplementing their retirement income. It is their retirement income. About half of married couples and 70% of unmarried beneficiaries rely on Social Security for at least half their income. For about 1 in 4 beneficiaries, it represents 90% or more of their income. That's why these COLA adjustments matter so much, and why the adequacy of the formula matters so much. Looking ahead, there are ongoing debates in Washington about Social Security's long-term funding. The trust fund is projected to be depleted by the mid-2030s without changes. That doesn't mean benefits would disappear, but it could mean automatic cuts of about 20% unless Congress acts. Proposed solutions range from raising or eliminating the cap on taxable wages, increasing the retirement age, means testing benefits, or some combination of changes. These are complicated policy debates with no easy answers, but they're worth paying attention to because they'll affect the long-term sustainability of your benefits. So here's the bottom line. The 2.5% COLA for 2025 is real, it's official, and it'll show up in your January 2026 payment. It's not as much as many retirees need, and it's based on a formula that doesn't perfectly capture senior spending patterns. But it's the system we have, and understanding how it works puts you in a better position to plan around it. If you found this breakdown helpful, hit that like button and subscribe to Buck Breakdown. We cover politics, economics, and government policy every week, always with the goal of cutting through the spin and giving you the real story. Got questions about Social Security or other topics you want us to cover? Drop them in the comments below. And if you know someone who'd benefit from understanding their upcoming COLA increase, share this video with them. Thanks for watching Buck Breakdown. Stay informed, stay skeptical, and I'll see you in the next one.